Friends, today I wanted to talk about an interaction which I had with my client. I thought that question will come in most of my investors' mind, so let me address it in a better way. One of my clients, Mr. Surendran, asked me that what is the reason for the recent correction which has happened in the equity market, especially in the last 4 to 5 days. And he also asked me about a short-term outlook, what will happen in the next 3 months. And this is the one question which is very, very difficult to answer. Let me explain you why. If you look at the foreign institutional investors who have come in the month of December after they sell off during October and November, they once again started buying in the month of first week of December, even during second week. Suddenly, in the last 4 days, they are once again taking their money away and moving out to different markets. One reason could be that the US dollar is getting more strengthened. There is a Fed rate cut which has happened. And if you also look at the quarterly results of Q2, India has not been so great. So, coming to his question, I will only know the data at the end of the day, what has happened in the market. I will not be in a position to know which FI is selling and why they are selling, because they see emerging market as a single group, which includes India, China, Indonesia, Brazil, South Africa, Bangladesh, Vietnam, and many more countries. So, if they are under allocated, they will always try to match that allocation by looking that allocation across different economies. But investors should not get perturbed based on the FI flow. Because one good thing what has happened in India is that 25,000 crore is the monthly SIP which is being hit in the domestic market very consistently. And the International Monetary Fund and the entire globe knows that India is the fastest growing economy in the world compared to any other larger economy. So, and our GST collections are also going new heights. All these things are very much set in place. But as an investor, you should think like an investor, not like a trader. And equity is one asset class which will never be in a straight line. It is always non-linear. In the last 4 years, 2020, 21, 22, 23, we never had any negative return. It does not mean that we will also have the same thing. Even if you look at the historical data from 2003 to 8, even though the market has hit new height every year, there was a 15 to 20% correction which has also happened in between. So that is the nature of the equity market, and the investors should think equity only for long term. The investor who needs to do the course correction is only that if they are very near to goal. For example, they have created a corpus for children education. If they are getting into college, what is the amount of inflow they have to pay? Whether is there any mark-to-market volatility which will happen, which will make them not to fulfill the good. That is one thing which you look at. If anybody has got a marriage expenses, which is a fixed expenses, if that money is there, whether to be in equity, whether to be in debt or in cash, they can make a strategic decision for that specified amount. Similarly, when you have that retirement corpus, what is the monthly withdrawal you will get? Whether that being in the scheme, can it give it as a long-term SWP, systematic withdrawal plan for a perpetual period? That is what the investors need to think, rather than constantly looking at market news and seeing their portfolio and getting perturbed on that. So my summary is that investors should look at equity, because please remember, in a growing economy like inflation, in a country like India where the inflation is much, much higher, and equity is the only asset class which can do that. Even I'm throwing a data here where the data itself is very clearly says that equity mutual funds has delivered consistently outperforming the market, the index and the benchmark by a fair margin from a 3-year, 5-year, 10-year, and there is a long-term wealth creation which is very much possible in the highly regulated investment market in India. So stay invested, keep investing, and don't get worried about 1% correction, 2% correction like that, because that is part of the equity market cycle, and equity is a risk premium which you are paying always there in an equity market. That is the reason why there is an opportunity to generate wealth. The only thing is that stay calm and stay focused and reach your goal through a disciplined investment. And thank you for listening. And I also wish all my viewers a wonderful Christmas and prosperous New Year. Let the New Year bring more laurels and more happiness to you. Thank you.